Good evening, good evening. How's it going? How's it going? And I am trusting that you're doing great. It is in the evening, and welcome to StepUP Conference 2021. And as you know, we are always here talking anything and everything around real estate. And over and above that, we are also talking about financial education, right? So I'm glad that you have joined us all and that we are going to continue. Today we are running a roundabout a tighter shift. We're not going to be having a lot of the administration talks. We'll do it a little bit later. As today, the guest that we are having, I think we are extremely privileged actually to have this guest blessing us and giving us his input. This individual that I'm talking about, he's been in the center of venture capitalists for a very long time, long before when I was still, well, was I employed at that time? Yeah. I just started working, and he had already started talking and venturing and spearheading stuff within the venture capitalist and things like that. And for us to get his time to come and talk to us and to come and give his knowledge, guys, we're talking about 20, potentially around about 30 years of experience that he is coming in to just come and share with us, his experience. Over and above that, what is it exactly that he do? So I'm extremely excited. And over and above that, I also want to remind you guys that we're always talking about reading books. We're always talking about, getting plugged in the right circles and things like that. And I think this is what it's all about. One of my great teachers, if you guys know, Robert Kiyosaki, I always talk about Robert Kiyosaki within this book. I don't think you can see it nicely. Let's see. And in this book here, it talks about why the rich get richer, right? In here is particularly a certain chapter, and I think it is the chapter 3, and it talks about why taxes make the rich richer, right? Why taxes make the rich richer. The other day, myself and Joe, we had a conversation around all of this, and we were talking about Section 12J, and we were saying that Section 12J primarily was really meant for the rich, because it was only people that could invest in Section 12J on 1 million plus. And people like me and you, ordinary people who are in the streets, people who are employed somewhere else, we don't have R1 million. But we've been privileged that, we've been administered with Grovest, and Grovest went out to fight for us so that we can start. Ordinary people like you and me can come in and invest into these funds like this, where we can invest at a minimum amount of 50,000. But it doesn't mean that you mustn't give us the million if you do have it. It doesn't mean that. It just means that primarily entry level. So without wasting time, I am going to introduce Jeff in a minute. And he's going to be with us for around about 30 minutes. In this 30 minutes, ladies and gentlemen, write down all of your notes. In the comments, I would like you to just fire away your questions as and when you get them. So don't wait at the end for Jeff to kind of like finish off and then you start asking questions. Let's ask all the questions up front right now. So without wasting time, I'm going to jump in and I'll bring in Jeff. And there we go. Jeff, hi, Sarah. How are you doing?
Hi, TJ. Thanks for having me. Much appreciated.
Awesome. Jeff, you've been in the middle of venture capitalist funds for a very long time, more than I've been in existence in business. And before you go on to chat about, what we are here to talk about today, the question that I want to ask of you is, why did you choose that route outside going to get employed and retire maybe at 60 and go and sit somewhere in Mpumalanga or maybe in PE? Well, they've got a new name now, and just be at the sun at the beach there. Why that route?
TJ, I don't know. Some people are built differently. Going to work for me isn't under protest. I love it. I wake up every morning. It's a challenge. I work long hours and weekends and public holidays, and you know, I don't see myself retiring. I just love it. I love developing. I love promoting. I love creating, and it's a challenge, and I love that. That's what it's all about.
Amazing. I thought that at some point, if I'm to take on this entrepreneurship and into fundraisings and things like that, maybe at around about 50, I'm going to retire and be somewhere in the Bahamas. But if I look at senior guys like you, you're still doing it up to time. It gives me a little bit of fire in my belly that I can still do it for a long time.
Yeah, and I like, listen, it's, you know, everyone's got their own priorities. I love it. You know, some people collect stamps. You know, this is like I say, I don't do this under protest. It's my hobby. It's my life.
Yeah.
It's, you know, what I do and what I enjoy. Meet interesting people. I learn every single day. I think that's what's so important, is that you continue learning and growing. And I think if that's what it is, you know, I'm happy to continue on this journey.
Amazing stuff. On a lighter note, your surname is Miller. Is there any relation with the liquor Miller, or not related at all?
I wish it was related. Unfortunately not. But if you know something that I've got an old family tie, please introduce me.
Ladies and gentlemen, this is Jeff Miller. He is from Grovest. We can almost safely say that he is Grovest. And I am going to go into the backstage. And Jeff, I'm going to leave you so that you can grace us with your presence and educate us a little bit more. And I am extremely honored that you have come through to our community and educate us about everything else that you're going to impart on us. Thanks, man.
Thanks, TJ. So thanks for having me. Good evening, everybody. I've been asked tonight to come and give, you know, some insight into Section 12J. My company is a company called Grovest. We were the very first Section 12J operators in this country. That was 7 or 8 years ago. Today, there's in fact over 200 Section 12J companies, of which we as Grovest administer in excess of 3 billion rands and manage over a billion rand as well. So I would say that we were pioneers of Section 12J. Unfortunately, it was a 12-year regime that started in 2007 and now is coming to an end. And it's coming to an end in June, so it gives us a last chance to actually take advantage of this regime. I think let's go back a step. What is Section 12J? I mean, Section 12J is a piece of legislation that's in the Income Tax Act. It was put out by government and Treasury to create jobs and to be able to provide finance for, let's say, entrepreneurs, early stage businesses that couldn't necessarily get business from traditional sources such as banks. So the 12J regime allows people to invest into a registered Section 12J company that is registered with FSCA, which is the old FSB, as well as SARS. And if you registered, with FSCA and SARS, you're entitled to run a legitimate 12J business, which allows investors who invest into the Section 12J company 100% deduction from their taxable income in the year in which the investment is made. So if you invest a million rand into a Section 12J company, you can deduct the full 1 million rand from your taxable income in this current year. The interesting part is that if you're an individual or a company and you can invest, individuals can invest up to 2.5 million rand, trusts as well, and companies can invest up to 5 million rand in any particular year. As I said, it's coming to an end in June, so therefore we've got one last chance to take advantage of this tax break that is coming to end in 30th of June. I think that, if I can say, that government, I think, made a huge error of judgment by bringing this regime to a close. Why? Is because I think we've raised about 12 billion rand to date in Section 12Js, and that money is being deployed to create jobs. And in our research, I sit on the board of the Venture Capital Association of South Africa, as well as the 12J Association of South Africa, and experience tells us that the price or cost per job using the Section 12J regime is the lowest cost per job out of all the government initiatives that they have done. So they're closing it. They obviously have their reasons, but I still can't reconcile that fact. I think it's keeping money onshore, it's job creations, it's giving money or assisting entrepreneurs who are starting their business to get equity funding. It's giving the investor a huge, risk-adjusted return because of the fact that you can deduct the full amount from your taxable income, effectively that you're using your tax savings to actually fund this business. So, in time, this regime creates very legitimate businesses, and it and they create tax-paying businesses because it has to be obviously compliant with SARS. Paying your VAT, paying your PAYE, paying dividends tax, that type of stuff. And in the UK, where they have a similar regime called VCTs, Venture Capital Trusts, over a period of time, these VCTs that have been established over a number of years are now cash positive, and it's actually not a negative drain on the fiscus. Obviously, it takes time to raise the capital, invest the capital, and for these businesses to become mature. But that's what's happened in the UK. And I believe that the South African government hasn't given us sufficient time to actually prove what can be done in the long term. That said, it is what it is. We've, so we have the last chance to invest in Section 12J companies. Section 12J companies are generally public or public companies. Because it's an offer to the public shareholders or to the normal public where they can invest. As TJ said, there's a minimum of 50,000 Rand. In fact, there's no minimum, all the way up to 2.5 million Rand. It's done by way of prospectus, whereby the company issues a prospectus, and then the public subscribe for shares in the Section 12J company. Now, Section 12J is not open to all companies. You're not allowed, none of the sin businesses, or can you invest in any of the sin businesses, which is, arms, ammunition, gambling, tobacco. But you can, and also fixed property, other than if you are in the hospitality industries, where you are investing in property which are run as hotel keepers, which are defined as companies which offer accommodation and food for risk and reward. So with that in mind, everything else is available to invest in, all the way from your retail company. You can invest in retail, you can invest in solar, in rental of movable assets, in venture capital. There's a whole host of different agri, farming, etc. But as well as hospitality assets. So now you as an investor have to choose which is a good fund to invest in, which is a Section 12J fund. You have taxable income, you don't want to pay tax, you want to rather use the tax savings to get an investment. So you want to invest in a Section 12J fund. So what are you looking for? So I think most importantly is that you want to look at management. You want to see that management has a track record, that they're not going to run away with your money, that you can trust them, that there's people on the board that you work with, and that they have a reputation, and that you can trust that they're going to make your money work for you. Also, what's important is, what are you investing in? So every company has a different mandate. Every company has a different risk appetite, and investors have to decide what do they want. So if you want to invest in a tech fund, got very, very high risk, because not many of the tech investments eventually succeed. Tech funds, you out of 10, you're hoping that 1 or 2 will shoot lights out, 1 or 2 will return your money, and the others that you know are not going to work. So that's quite a risky type of asset class, but if they do get it right, the returns are pretty high. What other investors are looking for is what we call an asset underpin. So where you invest in, let's say, where there's a property, you know, hospitality asset, where you are, whether in student housing or within hotels, one would then have bricks and mortar as your asset underpin, and therefore you are not just hoping that it's not all blue sky, that you know that there's assets, bricks and mortar, land, that there is an asset underpin. Same thing goes with solar assets or rental of assets, where there is an asset underpin. If you're just investing in private equity into companies, you know, they've got good ideas, once again, you're taking quite a lot of risk. Your returns might be higher if they get it right, but your returns could be a lot lower if they don't get it right. So I think it's very important to actually understand what you are investing in. What are your potential returns? Is there asset underpin? Is there a dividend? So some people invest because they need the income. So they'll invest, but they want to receive dividends because they'll use that income for whatever they need. Alternatively, some investors said they don't need the income and that they'll only invest in capital growth. So when you invest in, like, say, a tech share or in agriculture, it takes a long time for those assets to mature, or private equity, it's unlikely that in the short term that you're going to receive a dividend. When you invest in, say, student housing or solar, there you will get a return because there are, you know, there's cash flows that come in through every single month. So something that you as an investor need to discuss or decide on what is your risk profile and what is the asset underpin that you really require if you do or you don't. I think what's also important is that who is the administrator of the fund, is because you also want to make sure that you are Section 12J compliant. Because if you're not Section 12J compliant, between FSCA and SARS, you can run into a lot of trouble. And, you know, we as Grovest are administrators. We administer in excess of 30 odd Section 12J funds. We understand them. And it just so happens I've been invited today, you know, by TJ and Joe, who run Expati and M5, it's a fund which we administer, and we've been doing it for a long time. We have a professional team of 18 people to ensure that the fund is compliant with all the necessary legislation. So so what do you get when you invest in a Section 12J? So if you invest R1 million, you're paying tax at the marginal rate. You would be paying 450,000 Rand tax to the taxman. So you would, in a normal situation, you would, you know, if you were just paying tax, you would have to write out a check at the 28th of February, whenever it is, in order to make that tax payment. Section 12J, you deduct the full R1 million off your taxable income, thereby saving the 450,000 Rand, okay, because it's 45% on R1 million, and that you're using that 450,000 Rand really to make an investment. So if from R1 million, you get 450,000 back from your tax, so you've only really got 550,000 Rand at risk, using round numbers just so that you understand. So really what you have is that the investment needs to really just get down to 50% of value for you to break even. So there's a great risk-adjusted return built into that, into the Section 12J asset opportunity. If you invest R1 million, but you're only earning 200,000 Rand a year, you can still carry forward the 800,000 that you never ever, that wasn't in your taxable income. You can carry forward to the next year until the full amount of the investment has been used up. So when you invest in a Section 12J company, what we do is that you would receive a share certificate proving your ownership. that you own the shares in the Section 12J company, and you also get a tax certificate for the full amount of the investment. So you can, when you fill out your tax return on the 28th of February or whenever it is for the 28th of February, you can deduct that full amount that you've invested into the Section 12J fund from your taxable income. And like I said, you're allowed to carry it forward from year to year until the full amount is used. You have to hold your investment in the Section 12J company for a minimum of 5 years. So that what Treasury has said is that in order to get the full tax benefit, you have to hold the investment for 5 years. So if you are investing in a Section 12J company and you don't have the appetite, or you cannot, for whatever the reason, hold those shares for 5 years, it is not an investment for you. If however you can feel that you can hold that investment for 5 years, then it certainly is an opportunity to take advantage before June, because like I said, it's the last time before you're going to be able to, last time that you can get this Section 12J deduction. What does it mean? It means that on the sunset clause, it finishes on the 30th of June. You have to apply for your shares before the 30th of June in order that you take, that your application is prior to that. You have to hold your shares for 5 years. So therefore, from the 30th of June, you could have to hold the shares for 5 years from the 30th of June before you can actually trade them. And then how you trade them, is different exits. So either the company will buy back those shares from you, we can have a trade sale. Those shares could be sold onto another, let's say another vendor, or alternatively, you don't have to sell those shares. You can continue to hold those shares, and you can continue to earn dividends and growth in the share price in perpetuity. And then when you want to sell them, you can look for a buyer or have an exit. Some exits that there can be listings on the Altex, on the Johannesburg Stock Exchange, which will also allow to create liquidity for the shares after 5 years. But that's all depending on what the managers or the management company decides on how they want to deal with shares going forward. Just for reference, you feel free to actually post any questions on the chat. If you've got any questions, unfortunately, I have to run, shortly. So, I've said to TJ and Joe that if there's any questions, I'll take them during the slot. So therefore, and able to, hopefully, I'll be able to answer them, and then I can, give you some information. So, TJ, I don't know if there's anything that you want to, to cover in case that I haven't been articulate enough or haven't covered.
Yeah, thanks a lot, Jeff, on the great presentation that you have given us now. And I do want, and Joe, welcome. I do want to ask the question, two particular questions that I want to ask. Is that at the moment, yes, we do know that the Section 12J, the sunset is coming. It's very close by at the moment, right? And based on your office is a little bit closer to Tito Mboweni's office. You might even have his cell phone number and have conversations with him and tease and maybe. But the question here is there a possibility of an extension?
There's absolutely no possibility of the extension. We have, prior to the budget speech, we lobbied government extensively. We had many interactions with Treasury. We did surveys, we did research, we went to them with the job creation numbers, we went to them, with all that stuff. And unfortunately, in the budget speech, they announced that Section 12J would not be extended. Then when the Parliament had a chance to maybe throw it back, but there was no adjustments to any of the recommendations in Parliament. So all things being equal, 30th of June is D-Day.
Okay, all right. Is there a possible a new product maybe that they are thinking to replace the Section 12J with, that might be brewing that we don't know about?
Well, listen, we are hoping so. They've given us no clues as yet. It is a very complicated piece of legislation
Right.
that people did take advantage of in the early days, and then they made some amendments. But we, obviously we think that it's important to support SMMEs in the country, to create entrepreneurship, to support entrepreneurship, to create jobs. Is that we need some sort of incentive. But to date, whether they will come with a new incentive over time, I hope so. But they've made no, they've given us no clue, or have not initiated anything in that regard.
We're not generally looking for competition, on who is investing within our community. But what we've been seeing, Jeff, is that a lot of women are investing. Actually, statistically, we see more women investing. And at Section 12J global view, what does the stats look like? Is it more men or more females who are investing?
So, like I say, it's been around for 12 years, but only really has taken off in the last 4. In the last 4 years, we've probably raised 80% or 80-odd% of the capital of the 12 billion rand to date. And I can see that each year, according to in Grovest stable, and we raise, like I said, we've got 3 billion under administration, which is 25% of the market. Every year I see more and more women coming on board, and they're growing, the statistics growing. I didn't, if I knew this question was coming prior, I could have maybe done some research, but I can't give you the numbers. But I can certainly tell you that the number of women investors are growing, and I can tell you that the average investment amount is probably from women is greater than that of men.
Amazing. Joe, Joe, me and you, we've been talking about getting through to 1 billion in a year. And it really gets me excited when I can speak to someone else who's managing more than 1 billion. And at first, when you say 3 billion, I wanted to say, Jeff, did you say billion with a B, or did I not hear correctly? And if we are in the midst of someone else who's done it, the question to Joe and our community is, I'm sure we can do it too. We've got learnings from Jeff. They are guiding us right now from a compliance perspective, and the projects are there. I don't think that there's anything that can hold us back to get to 1 billion. So, Jeff, I want to thank you, and I know that you have to run. And thanks a lot. I don't know if there is any closing comments that you want to give in a minute or so before we release you. We've lost Jeff.
Sorry. Yeah. Thank you, guys. Thank you to you, teacher, and thank you to you, Joe, for inviting me. 12J, I'm very, very passionate about it. I'm very passionate about alternative investments. I'm really, I love entrepreneurship. I'm a serial entrepreneur. I love growing and building stuff. I see that's what you guys are doing in the student accommodation. I think you're in a very, very hot space. I think that's an underserviced area. So good luck. And thanks for having me, and I look forward to watching you grow and succeed.
Thank you, Jeff. I'm going to sleep on the billion part of it, and you enjoy your evening, Jeff. Cheers.
Thank you. Good night now. Cheers, guys. Bye-bye.
Awesome stuff. Ladies and gentlemen, it was Jeff Miller, and Jeff Miller, he is, if we could use the term godfather, I think we can. Joe, we can use that term today, isn't it?
Yeah, TJ is definitely the man when it comes to investments in this country, and he's been really instrumental in putting all the administration together in our fund. So we've been really lucky to have him on board. That knowledge and experience doesn't come cheaply.
Yeah. You can see, ladies and gentlemen, that Joe even had to go and do a clean shave there because he knew Jeff was coming. All right, good, good. So, ladies and gentlemen, what we're going to do now, I see there's a bit of questions that's coming up. What we're going to do, Joy and I, we're going to take a 2-minute break. And when we come back, we are going to jump into those questions and ask a little bit more questions. And don't go away because we've got something exciting that we're going to cover in the back room. So today we're going to cover something very different. And if you're here and you don't know what is the back room, well, you've been missing out. But those that have paid already, we will see you at the back room at the top of the hour at 8 o'clock. We're going to take a short break right now, and we'll come back and answer some questions via Joe.
Yeah.
Get ready to rumble!
We're back on, and yeah, welcome aboard. And Joe, thanks again for being here. And let's continue. Um, Joe, so there's a number of people, there's some questions that's been coming through here, and I'm just going to jump onto some of those questions. And whilst I go along, ladies and gentlemen, please do send me those questions in the chat. If you are on Facebook, we've been holding strong on Facebook so far. We haven't had any disconnections, but we keep getting on the platform that we're using now. They keep sending messages to say that it's not stable. So if it's not stable, please come through to YouTube. How do you get there? www.youtube.com. And once you get to YouTube, look for M5 Property Addicts. You'll see me and Joe Vala on live. Joe, I get goosebumps, man. Like real goosebumps. I'm feeling hot right now, you know, and this is not because of the lighting that's within the room that I'm in, but for the fact that a person like Jeff could come into our community for 30 minutes and talk about investments. I don't think people understand. This guy manages 3 billion rands.
Yeah.
Like 3 billion rands. And he still can address me by first name. He can still take a joke with me. And he's still an ordinary guy. I mean, I spoke to him this afternoon and we're having some jokes around it. I called him earlier on, and I was just trying to confirm that does he have the link and all of those things. And he was in another serious meeting, and he says to me, TJ, let me just finish off here. I'm gonna give you a call. He called me and we spoke. And I think a lot of times, when we get into certain statuses, when we can now afford to buy a Mercedes-Benz, we think that we have reached a different level. And now when you are greeting me, I have to extend a stick for you to greet me, because now I can buy a Mercedes-Benz.
Yeah.
But there's a guy who is man. I don't think people comprehend what 3 billion looks like. It's a lot of money.
Yeah, and even the fact that it was raised in the last 4 years, 80% of it, it's a timing and a speed to get to 3 billion. It's amazing, and it just shows you with what sort of people are we working with. We're working with the best here.
That's what it is. That's what it is. But I was also a little bit challenged, Joe. The fact that they are managing 3 billion, right, with 18 people.
Yeah.
And we are not at 1 billion, and we've got 40 employees.
Yeah, that's it shows you what you can do with the right amount of people. It's definitely it's a lesson learned. But
here's the thing, right? On the 18, they are more at a strategic level, and we are at an ops. That was my comfort feeling when because we are more at a granular level, trying to make sure that the students are there, security and all of those things. And they are at a strategic level. They were thinking and things need to be done. But I think differently when I'm hearing conversations. You know what I mean? But anyways, Joe, let's go to the questions. We can spend all night talking about Jeff. One day, me and you are going to be Jeff, ne?
Oh, absolutely. That's the right circles to be in.
Exactly. And I think, ladies and gentlemen, you are in the right community where at the early stage like this one, you can still plug your money. Together we can grow. That's what it's all about here. We are hanging out with the likes of Jeff, giving us direction. This is how it's done. And out of that, we're bringing in a different flair into the community of Jeff. Like we play heavily in student accommodation, which is something that they don't do, right? And we are plugging in there, and we're giving them a different taste of what the 3 billion can now do. So I'm gonna say this. There's about 330 of us right now watching this. I want you to invest with me. I honestly do. I want 100,000 from each and every one of you, a minimum of 100,000. If you can give us more, I'm happy with that. But I am unashamedly asking you to invest with me so that I can go and create jobs, so that I can go and get more students to have a better place that they can call home, so that we can create better jobs in the farms that we are going to be creating, so that we can have employment on those jobs, so that you can have food, quality food that we are going to create in these farms. No chemicals, water and nitrogen, that's it, right? So I'm gonna ask you again, today is the day that you're going to hear me saying, I want your money in our fund. If you don't have money, go and ask someone else. If you're not going to invest, go and ask someone else to invest with me. If that person invests with me, we can reward you. And if you're that person who can be able to sell this, we want you to connect with us. Connect with Joe, with myself. We will sign you up as a promoter, and you can go and sell. And out of whatever money that you're going to be raising, you will get what is called a finder's fee of 2%. 2%. So you raise $1 million, 2% is in your pocket. That's it. No questions asked. You've done your job. So help us to get there. Joe, someone else asked a question here, man. I'm just going to pull it up here.
Yeah.
Musa Wenkosi Makoba. I'm keen on the replacement of the, I think they wanted to say the Section 12J. If the government is doing away with it, what will be its replacement? Jeff did touch on this one.
Yeah, I can answer that again, TJ. And it's currently there's no plans for replacing the Section 12J with alternative legislation that would give you the same benefits. So at this stage, no news from government regarding a replacement, but we still have till the end of June to reap all the benefits of the Section 12J. So now is the time. And obviously, you're going to still pay tax from now till the end of the financial year, which is February next year. So it gives you quite a bit of time to actually plan ahead and appropriate your funds correctly, to get that benefit.
Good, thank you. This is Rose Malele. Rose, she's asking, am I able to top up on that investment, or if I top up on the M5 investment, does it also translate to tax benefit? Maybe let's split it for it to make sense. I think the first part is they're just asking, Rose is asking, can she top up? So if she makes an investment of 50,000 now, can she do a top up of 30,000 for argument reason?
Yeah, absolutely. Yeah, TJ, so that's a good question. Yeah, we will be allowing people to top up their investments. Obviously, it's going to be a much easier way to do it if they do it now between the end of, well, now until the end of June. But obviously, if we can accommodate them if they want to top up after June and possibly get them to just commit beforehand, and we'll assist them with that. But obviously, there needs to be an initial investment, for the option to top up later in the financial year. That is absolutely possible. We can do that for them.
I think if I read the bottom part of the question there, I think the other way that you can answer this, Joe, is when you are actually going to give the SARS tax certificates, because the question here at the bottom now is, does it also translate to tax benefit? So if I pay 50,000 now, I'm going to get my certificate, my tax certificate, and then I pay again, or should I say I invest again, I'm going to get another tax certificate. So you, as our fund manager, and I'm saying you here on behalf of M5, you are going to issue, when are you going to issue tax certificates?
Yeah, so there will only be one tax certificate issued, and that will be issued after June. And that tax certificate will be for the full financial year. So there won't be two tax certificates because we only have one closing date. And the funds we're raising, the cutoff date is end of June. So to use your tax rebate to top up your investment, it can be done, but it will not come with the additional tax benefits of your initial investment. But you'll still reap additional rewards of your investment if you want to top up at a later stage. It's not an end of the road sort of situation. The fund will live on to for another 50, 100 years. We're not planning on closing the fund. It will look after every investor for the perpetuity, of the fund.
Awesome stuff. Joe, I'm going to try to do something here a little bit crazy. I hope it's going to work. I want to go to a slide that I've just done, and I'm hoping that it's going to work. Right. Can you see my screen there?
Yeah.
Okay, awesome stuff. So in a nutshell, this is what's happening. So there's M5 here, right? Grovest, that's Joe, we're being administered by them. You are sitting here as the investor or as the taxpayer, and what will happen first is that you need to invest. and that's a minimum of 50,000. It's going to come through to us then. What you're going to get is, number one, you get your share certificate together with your tax certificate. Your share certificate is your ownership, right? Ownership to say, I own this. It's like a deed. So I own this. And then thereafter, if you're on medical aid, roundabout Feb, March, or even Jan, you get a tax certificate that you can submit to SARS. This is the same thing. You get a tax certificate. On your IRP, when you're doing e-filing, they ask you, have you invested in a Section 12J? And if you say yes, the number on the tax certificate here, they're going to want it. And then they would also want that tax certificate to be scanned into e-filing. And then, boom, you're going to get 100% of your tax deduction. What do we mean by that? You are going to get 100% of your taxes. So if your tax bracket is 30%, you're going to get all of it, the entire 30% of it, right? That's what it basically means. What if it's 45%? Yes, you're going to get all of it. What if it's 15? Yes, you're going to get all of it, right? Now, you have now secured your investment. Then what is going to happen in the life cycle of the investment? So the investment now continues over a period of time. Year number 1, 3, 4, 5, 6, 7. Each year you're going to get what is called dividends. What is dividends? Profits, right? We are going to be distributing that on a yearly basis. And we are saying that obviously your investment will grow in the places that we are buying. Yesterday we were talking about investing in townships. The reason why I don't buy properties in townships is because they don't grow. There is no growth, right, on the asset. So the places that we are investing in is in your middle class area, into your upper class areas for student accommodation, so that the value of the asset can also grow whilst we are also getting cash flow, which translates into the profits. Okay, I hope that makes sense for you. Now, let's talk about this component here. Joe, you can still see my screen?
Yeah, if you can enlarge it a bit fast, thanks.
Okay, good. Right, I think this is the best I can do now. Let me draw it one down. Okay, good stuff. Right, so let's explain this a little bit, because I think for some people they're kind of like getting confused on how does this work. Right, let's assume your tax bracket is 45%. That's the highest that a person can get as tax. That's the highest that you can get taxed on. So if it's 45%, it basically means that by July 2022, that's what we are declaring as year zero of your investment. So you are going to get 45% of your investment. Okay, that gets paid out to you. If you are on 30%, same thing. 18%, the same thing. And if you're a business, you can get taxed up to 28%, and that's you. Now, that money now belongs to you. SARS is just going to say to us, we've paid out the money. Now, with that amount, what we are now saying is that this is year zero of the investment. July 2022, you receive that money. However, from an M5 property addict as the fund, on year one of the investment, because remember you're investing now, right? So year zero is SARS money. Year one is now money now coming through from this asset, the asset where you have invested in. Now we are going to be paying 7.5% year on year. So this is year number 1, 7.5. Number 2, number 3, number 4. We are paying in July. You can see that, right? All the way to 2026. So for a person who earns 45%, it basically means that their returns for the 5-year period is 83%. Boom! Yeah, 83%. That's the growth of their money. But hold on. We are talking about on current rentals. How about if the rent goes with 5%, 10%? It's possible, isn't it? Right? Okay. So if it goes up, obviously this is going to grow up. Now, if we are to translate all of these percentages, we say, what is the average? What is the average? So we calculate from here to there, and then we say, okay, fine. So this here that they're getting, what is the average? So it basically means that per year, your money, if you earn 45%, your money is growing 17% on an annual basis. But we are not going to give you 17% on an annual basis. It's going to be distributed in July as a 45% from SARS. Then M5 is going to give you the 7.5 all the way to 2026 in July. And at this particular point, if you want to leave the fund, that's up to you. You make that choice. But for us, me and Joe, we want to keep this fund until our legs are tired, until we get to $1 billion, until we get to 3 billion. I like the sound of that, Joe. It rhymes, man. 3 billion.
A lot of zeros. It's a lot of zeros.
Yeah, yeah. Now, you might have a trust, and the trust sits here by default. Okay? And potentially you might be an individual, but you're earning a little bit less here, right? And that's how you get it. And then maybe you might be a company that's in your bracket there. For people that are maybe getting paid, middle class people who are within the middle management and a little bit lower in the administration, a lot of people sit here in the 18%. Okay? Someone asked me the other day, and they said to me, TJ, let me hide there Rose's comment. And they said to me, TJ, how do I know actually what's my tax bracket? And I said, sure, I am not the only person. When I was employed, I didn't know what was my tax bracket. Okay. What I'm going to do for you is I am going to go to SARS website, right? And I am going to get you the link. And within that link, you could be able to see exactly what does SARS say for you. So I am just going to quickly go there, but I'm going to put the link now in the comment here, so that you can be able to go and check for yourself and how much you qualify. So SARS is saying between 1 to 195. This is per annum, right? So that's your tax bracket there, 18%. Now you're earning 195 to 300. Now it's a 26%, right? And it goes on and it goes on, right? So you can literally click on this link here, and that's the tax bracket for individuals, right? You can still see my screen. Okay. And don't say Uncle TJ doesn't love me when I'm sharing all of this to you. Okay. Right? Now, you can sleep tonight knowing how much. I'm hoping that at least you know your cost to company. And if you don't know that one, then we've got a problem. Because you're working and you're working hard, but you don't even know what is your cost to company. Now, in that link there, check how much you earn. What's the bracket? Then you can go through into how much percentage, your tax bracket. Then you go on onto that page that we're talking about, and you can literally see for yourself there that if you are to invest, what's the percentage that you're going to be getting? Do you fall within a 17, 11, maybe 15, and that's the average percentage that you're getting year on year. I've got a question here from someone else. Musa Wenkosi, I think we need to give Musa Wenkosi something, man. He's asking questions. I'm a generous guy, and people that participate, I reward people that participate. I think we need to bless him with something. What can we hit him up with, Joe? Musa Nkosi, what would you like? What would you like from Uncle TJ? Give me 3 things that you would like from Uncle TJ. Uncle TJ is going to bless you with something tonight. Well done for asking the questions, because a lot of us are learning because Musa is asking questions. And this is what it's all about. There's 330 people, but we're not getting as many questions. So if you ask, we learn. Joe and I learn. You also learn. There might not be a damn question in the room. But he says, Musa Nkosi says, this is a crazy question. Yes, it might be a crazy question, but it's worth going for it. What is the question? Someone has 100% equity in a 500K property. If they refinance, would investing with you be worth the trouble? Or they are better off paying another property on their own? Okay. Let's take it from the top, right? We're going to make an assumption that, right? We're going to make an assumption that you are earning, you've got a 45% tax rebate, right? Joe, you got that spreadsheet of yours that gives us how much money one can get. Do you want to pull that up, or should I pull it up? Maybe I should pull it up, man.
Yeah, I think if you can put it
Remember,
up.
you remember the spreadsheet that we're talking about?
Yes, I do.
Okay, good. Let me pull it up now. Musa Nkosi, thanks a lot for that question, then. That question actually gives us the ability to really populate or to work out a real live answer. So what's going to happen now, Musa Nkosi, is that you are going to get 500. All right, so let's assume, it's an assumption that we are making here, right? You're going to get 500,000. Out of the 500,000, you are wanting to then put it into the fund. Yeah, and let's do the calculations together. What is the window there? No, it's a Chrome. Okay, good. I'm almost there. Right. Now, this is 100,000. Let me change that to 5, isn't it?
Yeah.
Right. Can you see my screen, Joe?
Yes, I can see a screen.
Okay, awesome stuff. So now on 500,000, okay, and now what we are now saying is that this is on 45%, right, Joe? So we need to copy that and okay. Let's do it that way. Right. So if you're on 45%, Musa, next year in July 2022, SARS is going to hit you back in your face, bruh. Brad Tito Mbeweni is going to be like, boom, in your bank account, 225. Okay? Now, bearing in mind that the property that you have, I'm hoping that you're going to put a tenant in there, and that tenant can pay off your debt, which is the 500 that we're talking about now. Okay? So remember, we've got a house. Musa Nkosi has got a house. In this house, right, he has equity of 500,000. Out of that, he's going to refinance this property. The bank is going to give him 500. When the bank gives him 500, he's got a tenant. The tenant is going to be paying rent. So they are paying off the Musa's debt. But SARS is going to be saying, hey, Musa, in July 2022, we'll give you 220. Musa can take that 220. This is how the rich get richer, Musa. You can take this 220, you can pay this off if you want to. So now your debt is less 225 now. Yeah, makes sense? That's part A. Or you can take this now and go into another property and make a deposit on another property. Now you got 2 properties, but hold on. From now on, July 2022, you get 37,000. Boom, in your bank account. July 23, maybe you can go to Kruger with me. Maybe you can go to malls. I don't know. Whatever you want to do with your money, it's your money, right? Or let's take it an average individual, right? Let's go the higher mark. So let's talk about a 30%. 30%, I think a lot of people, around about 28, 30%, middle management going up. These are the figures that you're looking at in Musongos. Can you see that? That's what it looks like. Okay. I don't want to go much into technical around it, but in a nutshell, it's a wiser idea. But I always say that when you think of such kind of an idea, don't come through to Angotije and like Angotije, is this the right idea? I'm not an advisor. Remember that. I didn't go to school to learn financial advice. Neither did Joe. What we want you to do is to put in perspectives. What is the scenario? If I take this 500, do I have a tenant or am I staying in that property? If you're staying in that property, that means that you're out of pocket. Can you afford to pay it down? Can you afford to pay that rent? That's another scenario. So you look at all these scenarios, you put on paper, and then you make the decision. And out of that, you can come through and invest alongside us, and you'll be making some money together.
TJ, I just want to add something to the previous question, is that the share certificates that we issue is transactionable, that, when you buy a new property, they ask you what sort of assets is on your name. And our share certificate is one of the items that you can list to put on your application to buy another property. So it's a positive asset, and it's something that we need to keep in mind.
Joe, you see, that's why I hang out with you, man. So that's another thing, right? The share certificate is an asset on its own. That's what Joe has just said. I'd forgotten that one. That's a good one. Thanks, Joe, on that.
Yeah.
Right. Let's go on to Tembisa. Tembisa, for companies that are based on Section 12J, what will happen after the deadline? What will be the possible impact on their income, if any? I'll leave this one to you, Joe.
Yeah, so for companies that are based on the Section 12J, so after June, what will happen is that we've received all the investments and we've made out our share certificates and tax certificates to our investors. So after that period, the fund will still continue and will still invest the gains in the funds into new properties and grow our portfolio for our investors. But we will not have the advantage to give them a tax rebate in year 2, year 3, year 4, and year 5. But we still have that advantage where we have the accumulated investments that will invest into more properties and grow the portfolio in that way.
Okay, awesome stuff. Someone asked the question. Musoko says, all I need is 3 billion from Mr. Jeff's fund. Come on, man. Come on, man. I don't want 3 billion from Jeff. I want 1 billion. Right. Tembisa says, thank you, Musa, for asking the question. Thanks, Tembisa, for being a good team member there, recognizing that someone else has also asked the question. Thanks for the response, TJ. Really happy with the response. It's complex, but gives some idea. Okay, awesome stuff. Right. Ladies and gentlemen, I am coming to an end. We are going to be meeting in the back room for those of you that are meeting in the back room. Joe, I can release you and you can go and connect with the kids and stuff and put them to do. And I'm going to continue here. So ladies and gentlemen, let me see you in the back room. You do have your links already. If you haven't received your links, they are in your emails, but we will be connecting there in the next 3 minutes. Thank you, Joe.
Okay, everyone, thanks so much.